Hey, it's Clay Trader, and this will be a video chart on ticker symbol DRYS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this may look like several days worth of time right there, it's actually just today's price action broken down into 30-minute time slices. I've been doing this analysis on a very routine basis, so that's where all these different colored line annotations are coming from. But let's get things updated here as a new week is upon us. The main annotation here I want to focus on is this orange line, and I realize this will mean a little bit more to those of you that have watched the video from Friday, but this was a trend line that I mapped out to kind of measure, is the price putting in higher lows? I mean, is the price making progress? And you can see today the price did technically, break through it. However, with that being said, it's not like it was a complete disaster, meaning, the price breaks below it and then it just spent the rest of the day continuing to get further and further away from it. Yeah, it broke through it, but after, it broke through it right around here, essentially after that point, it just went sideways. So, yeah, it is below it technically speaking, but it's still well within the range, so I'm not going to sit here and say that, the bears took a massive chunk out of it or anything like that. To add a little bit more perspective to that, if we just drop this green line here to kind of show where this level of support is, you can see that the price is actually still up above this area of support right there at $4.50, which is where the price bottomed out right there. And, it's kind of just been hovering right around there. So, yeah, the price is below the orange line, but for me, a true break of the trend line, I'm going to use 450 to measure that. Meaning if the price breaks below 450 and then starts to close below it and separate to the downside of 450, at that point, well then yeah, there's no doubt about it. It's a full trend line breakdown to the downside, and the bears are not only kind of regaining control, they've pretty much taken back over, in the entire control at that point, because below 450 or worse if the price keeps on separating to the downside. At that point in time, price is essentially right back to where it was in this range, and that's not what truly strong moves do. But so far, price is holding up above $4.50, but the bulls need to step back up. Ideally, you definitely did want to see them hold up above that orange line, and they didn't do that. Still willing to show a little bit of grace here, with the 450. But a 450 can't hold. At some time you just got to admit, all right, bears are back in full control. So that's kind of what the 450 level is representing right now. With any sort of bounce, first key level you want to see the price get back above is, obviously that orange line there. And then next key level to keep an eye on is going to be that purple line right there, which is the 50-period simple moving average. But the key thing right now is kind of just keeping an eye on that 450 mark and making sure the price can stay up above it. So we'll see if the bulls can do that or not. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interested in and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.